look for money actively, the next thing that we do after saving, we purchase. We purchase investments. These investments are assets. And the assets are classified, or we will classify our assets into three. We have financial assets, which are investments that are not physical, but they are denominated in currencies. A good example is a bond. Another one is a share. The second class of assets in the investments are physical assets, such as buildings or real estates. And the third class of assets are dead assets. At least, even if they are called dead, they are assets. The term dead is denoted in personal finance to mean or to describe an asset that is not at the moment generating cash flows. A good example given is a home in the village that you are not using. Another one could be a piece of land that you have bought and there is no income generating activity happening on that land. But as I say, they are assets. They are storing potential. They are storing value. And they can be activated to start generating income and build into our cash flows. In this video today, I want us to look at least 5 different assets or investments that you need to have in order to guarantee a lifetime passive income. We'll be looking at those assets after 3 seconds short break, so don't go away. Thank you for staying on, and we appreciate your share, your thumbs up, and subscriptions to this channel are never taken for granted. Welcome back. The first form of asset or investment that you must have is cash. Cash. This is money in liquid form or money invested in opportunities that are quickly accessible. These mainly are bank accounts. Cash is needed to take up opportunities quickly. There are opportunities that arise and need actions immediately. Such opportunities give us huge markups or huge margins. A good example, you have a friend or you have a person who needs to release or liquidate a vehicle, and because of the pressure, maybe because of a debt that is being pursued or any other emergency, this vehicle or this asset that this person is selling is sold at an affordable, a low price. That is an opportunity. You purchase or you use the money that you are holding for such speculation opportunities, purchase that item and dispose it at a higher price, giving you a huge margin. Other cases where the reason why you need to hold your cash is emergencies and bills. Asset number 2 are bonds. Bond investments are low risk profile investments and they guarantee regular biannual incomes. These incomes, when received and accumulated in an accessible compounding account such as a money market fund, they can be available for monthly withdrawals to support or to finance their lifestyle passively. The third investment or assets are equities. Equities are also known as common stocks, stocks or ownerships. Shares are bought for 2 reasons or for 2 purposes. One is growth or growth shares, which are stocks that we purchase at low prices with the intention of disposing them when the prices go up. And the second reason for purchase of shares is dividends, and such stocks we call them dividend stocks. Those are shares that we buy purposely for dividend income. Those are shares that we hold for the longest time for purposes of receiving dividends. And dividends are paid in two ways, either annually or 2 times in a year as an interim dividend and a final dividend. In rare cases, they be paid in higher frequency. Investing in stocks, one thing that is very important, you need to avoid penny stocks. These are shares that trade at low prices, as low as a shilling or 2 shillings. Such shares don't make a lot of difference. Therefore, the stock or investment is a mutual fund. When you are investing in equities, there are 2 options. Either you are investing in your own business or your company, or you are buying shares of other companies to own a percentage or a portion of that business that belongs to another person and a public entity that is listed in the bars. Such acquisitions of stocks, you are buying from a single company, which exposes you to inherent risks associated with that particular business. To cure the risk, or to cure that challenge of exposure to inherent risk associated to a single business, we invest in mutual funds such as index funds. Index funds are baskets or pools or collection of multiple stocks belonging to different lucrative companies that give us a low risk profile because of the spread of that risk, and also give us better returns. Examples of index funds is the SP 500 and the Nairobi Stock Exchange 20 share index. The number 5, we have real estates. This denotes investments in land and building for purposes of rent and occupation income. Investing in real estate will give us regular monthly incomes out of rent or occupation by other person. Real estate investments, because of its challenges or exposure to risks associated especially to old age and people outside or not near where the investments are located for purposes of management, they invest in units of real estate that we call it REITs. REITs, we shall look at them in another video. And lastly but not the least, we have digital products. Digital products, these are online products that you create, and they are accessible by users online at a fee. They may not or may require updates time to time, but they will give you a passive income because majorly they do not require a lot of your input. Other assets that can give you a regular income passively are royalties, we have franchises, we have licenses, and others. Thank you for watching.